Good afternoon, everyone, and welcome to TurfChat episode 42, Solutions for the New DOL Overtime Rule. So we got a great TurfChat today. We have a couple folks. It's summertime. We're all busy. We got members and guests out on the golf course. So we've got General Manager Joe Mendez from Rally Run Country Club who's going to jump in about 5 minutes. I'll let Joe introduce himself. But I've got with me, and I'll let him introduce himself in a minute, Mr. Warren Cook. Just some welcome messages here, and then we'll get started. So we welcome you to the TurfChat series, a platform for us to discuss solutions across Google Hangout and social media. So it's been a great, successful platform for us, providing the turf industry solutions. We certainly would like to thank our partners, presenting partners in this, Pioneer Athletics. We typically show a little message from them, but Google, YouTube is having a little technical difficulties today. So we're going to put their message in the post for you. But Pioneer Athletics has been a fantastic partner of ours. We encourage you to check them out on Twitter at Pioneer Athletic or on Facebook. You can also check out their Bright Stripe Facebook page, showcasing a lot of the fantastic logo designs on sports fields. You're welcome to share your logo design with them on their Bright Stripe page. So we thank again our partners at Pioneer Athletics for this. So to get into things, Mr. Warren Cook is going to introduce himself here in a second. But we invite you to, if you want to jump in, you're welcome to jump in. Just message me, and I'll pull you into the Hangout. Or you can message us on social media at Turf Republic. We're using the hashtag TurfChat, and we'd be glad to get you some answers. Mr. Warren Cook is also going to provide us follow-up information, his email address, some social channels, and you're welcome to follow up with him as well. So, Warren, I'm going to step aside here and sort of let you take things from here. I'll let you introduce yourself and your company, SymbianceHR, and we'll start the presentation.
Great. Thank you so much, Bill. I appreciate it.
Absolutely.
So welcome. I'm glad everybody can join us today. I'm happy to be here today to share with this audience and this industry information that's going on with the Department of Labor and the overtime rules. So my background, rather than boring you with a lot of degrees, I've got bachelor's in HR, I've got an MBA in project management, and my master's degree in IO psychology. All that means is that I've worked in the industry for a little over 20 years, helping large and small organizations deal with these types of changes in the regulatory world and arena to help them stay compliant and remain successful. And so, as Bill said, at the end of the presentation, I'll share with you some contact information. But for now, I want to jump into the presentation so you can get the information that you're here to learn about today. And so we're here to talk about the FLSA overtime rule changes, and this is really about going beyond the basics as far as what we want to learn and what you need to do for your organization. So we're going to cover today what is the Fair Labor Standards Act, which is known as the FLSA. We want to definitely go through who does the law apply to, because for the most part, it applies to just about every business in the U.S. We want to talk about who the law is intended to protect, and what does it mean to actually be exempt under the Fair Labor Standards Act. We're going to talk today about the overtime rule changes, when they're effective, what changed and what stayed the same, because not everything that was proposed or that we thought was going to change in the industry actually did change. And then we're going to really talk about the business impact. That's the most critical piece. Once you understand what the Fair Labor Standards Act is and what it means, we really want to help you understand how does it impact you, how does it impact your business and organization. We'll talk about the compliance risks that are associated with the Fair Labor Standards Act changes. And then we'll wrap up with what I think is some of the most important pieces. What are the strategies for you in making sure that you have a compliant workforce and organization and that you remain successful? So I'll skip the bio because we already talked about that. But first, let's talk about what is even the FLSA, the Fair Labor Standards Act. And this is basically a lot of detail about what the Fair Labor Standards Act is, but it's basically regulations through the U.S. government that make sure that every worker in the U.S. is paid at least minimum wage and that they are at least provided overtime when they work beyond 40 hours. And I did put a note in here because if there's anybody watching this from California, I'm sure there's a lot of beautiful golf clubs out in that way. California has their own state laws, and under California laws, overtime would be over the 8 hours in a day. So if you have specific questions about California-specific law, we can address that, or we can address that offline even. The law applies in general to all employees of an enterprise that has an annual gross sales of over $500,000. but it also applies to individual employees that are engaged in interstate commerce. So when you try to figure out whether or not you're covered, in most cases you are covered, with a few exceptions. But even if you don't have $500,000 in gross sales, if you have a receptionist, an admin, an employee that is calling across state lines, ordering supplies off of Staples or anything else that the government would consider interstate commerce, that individual is going to be covered even if the whole organization is not. When we talk about exempt, the actual term exempt under Fair Labor Standards Act is all about whether or not your employer has determined that you meet the three-pronged test for the FLSA, and they've decided they want to exempt you from overtime. And so they are taking steps to say the work you do, the duties you have, and the work that you perform should be exempt from having to pay you overtime at a premium of time and a half. And do you have any questions at this point, Bill?
No, I don't. I know Joe Mendez has joined us. Joe, how are you doing?
Good, Bill. How are you?
Good, good. Glad you could join us. We've just started here, so Warren, I'll let you keep going. And Joe, if you have any questions as we're going, feel free to jump in and fire away.
Great. Welcome, Joe. Pleasure to have you here.
Thank you.
So in order to go and determine that an employee is going to be exempt from these FLSA regulations and make them kind of what is known in the industry as just white-collar exemptions, there's three different tests that are actually involved, and this starts to address the misnomer that as long as you pay an employee a salary, then you don't have to pay them overtime. And so when we talk about white-collar, we're talking about executives, administrative, professional, computer professionals, outside sales folks. Those categories under the definitions from the Department of Labor are really what we're talking about when we talk about white-collar exemption. These three categories that we're going to go through here briefly are really critical in understanding that any one of them that are not met prevent you from classifying that position and that employee as exempt. And so the first thing you want to think about is, are they paid on a salary basis? Are you paying that person, that individual, a salary that's predetermined, it's fixed, it doesn't get reduced even based on the quality of work, doesn't get reduced based on the quantity of work performed, and under no circumstances are you really going to take any effort to change that pay on a weekly or bi-weekly basis, whatever it is that you're paying them on. And the salary basis is different than how you're compensating your payroll. You may process payroll bi-weekly, semi-monthly, monthly, but on a weekly basis, how are you calculating this individual's wages? And if it's a salary basis, then that you've met the first test of the three-pronged process. Talking about the next step here is the payment of minimum salary, which is one of the things we're going to address that's changed, but you have to pay them a minimum salary of $913 a week. So you have to pay them on a salary basis that's not adjusted or changed based on their work. Then you have to pay them a minimum of $913 a week salary. Those two things might be the easier to meet because the third piece is the duties test. And this is the one test that a lot of people don't think about or have never been exposed to understanding. The employee's job duties that they're primarily involved with that are associated with either the executive, administrative, professional, outside, or computer sales, these white-collar exemption categories, must be satisfied. So even if you're going to make changes to the salary because you hear the rumors or hear all the news out there about the salary level's changed, it's gone up, let's just match the salary level, if you don't have the duties test satisfied, then you're really going down a poor path because you wouldn't qualify as FLSA exempt anyway. So here's the big changes. So the FLSA rules have changed. The change date and the effective date is going to be December 1st, 2016. And there was a lot that went into this. So from a why they did this, it was designed to help employees to ensure, as President Obama says, ensure a fair day's work equals a fair day's pay. And so you start to see that it's employee-centric. It's really designed to follow up on the law, hold employers accountable, and make sure employees are paid what the government feels that they should be paid for, anything over 40 hours. And it's designed to hold employers accountable. So this really is not a new regulatory change and a rule change to help small businesses or businesses around the country fix their problems. It's to hold them accountable to make sure the employees are taken care of properly. Now, when we think about a short window, most of the time when the Department of Labor rolls out any kind of regulatory changes, these changes usually have 6 months to a year to implement. Sometimes they're multi-year implementations, similar to how the Affordable Care Act was rolled out. You have multiple years to implement it, and you have phased approach. Since this process started way back in 2014 to 2015 with the Department of Labor submitting these proposed rules in 2015, the government felt that there were so many comments, as you can see on the slide here, over 250,000 businesses, organizations, and lobbyists sent in comments about these rule changes, that the government didn't feel like we would need much time to make a change because everybody knows about it. Now, that's a little naive on their part, as well as how much time they think employers are going to spend fixing this, which is a few hours. They assume each business is only going to spend a couple hours to fix this, which is really not very accurate at all. But come March 2016, the Department of Labor submitted a final rule change after receiving all these comments. And then in May of 2016, on the 17th, it was approved by OMB, and it was released with December 1st as an effective date. So a little over 6 months' time, businesses and organizations need to recognize that they need to come into compliance by December 1st. So, any questions on this, Bill or Joe?
Nope.
Nope.
Good. Fantastic. So here are the actual changes that took place. So the first thing that changed was the salary threshold. It more than doubled. This was a huge contention for business owners all around the country and organizations, especially nonprofits and others that are impacted just as well, that it doubled to $47,476 per year, or as I mentioned earlier, the $913 per week. And if you think about that, some organizations immediately said, wow, well, then all we have to do is raise people's salaries and we're good. But it's a critical business flaw if they're going to chase that. But in any case, that's the first change, that they changed the salary threshold, and that hadn't been changed in decades. The next piece is that highly compensated employee threshold was increased from $100,000 a year to $134,000 a year. And I'll digress for a second and say that when you have employees who make over the highly compensated threshold, they don't necessarily need to meet all of the duties test for any one of the white-collar exemptions. Instead, they only have to meet mostly or primarily one of the aspects of the tests. And so there's a lot more details around how you go about calculating that and determining that and documenting that. But if someone can't qualify under all the pieces of the duties test, but if they're paid over this $134,000, it's very possible that you may qualify under the highly compensated employee exemption rule. There was something that was put in place that the government felt was a great idea, and so they don't go through this process year in and year out. They automatically are going to update the salary every 3 years. And so if you think about organizations that may be thinking, well, you know what, we'll just bump up a few people's salary to meet the exemption to save overtime, they're going to be chasing this every 3 years, which is really going to hurt their business from a budget and a planning perspective. A non-discretionary compensation can be counted towards salary threshold with limits and restrictions. So for the first time, the Department of Labor has decided that yes, we're going to recognize that if it's non-discretionary incentives or commissions that you are going to give this employee, you can count up to 10% of that towards the salary threshold. So there's lots of examples out there, but if you know you give a quarterly bonus based on business performance of 5%, and you know that 5% is going to get your person from $45,000 up into the $50,000 range, then you probably are going to be able to ensure that person remains exempt under the overtime rules. And it even allows and provides the employer an opportunity to make catch-up contributions and matching. So if you go a quarter or two where you didn't have that, if you recognize that they would now fall outside of the scope of the exemption salary threshold, you could pay them additional funds so that you keep them in an exempt status.
Warren, question for you. So if somebody were to get audited or you had to prove this particular bullet point here, how is that measured? Do they go back 2 years, 3 years? Is it by year, by quarter, a certain amount of quarters?
So right now, their goal is to make sure that you meet the first thing they always look at, and it's a great question, Bill, is they first want to know whether or not they're meeting the $913 per week. So that's the first thing they look at. Out of that $913 per week, if you can prove and demonstrate that in the quarter, in that month, over that quarter, but really annually, depending on how much data you have, if it's only a few months in, you're only going to have what data you have, that you can demonstrate and show that between the salary and the non-discretionary amount of money, you will reach at least that $913.
Okay.
So if you have quarterly payments and you're paying them the 15th of the month following the quarter, when you do that payment, someone should be going back and looking at that prior quarter and saying, okay, with the discretionary bonus they got or the incentive they got, when you add that into their compensation, did it then equal the $913 per week, so that at the end of the year they will hit at least the $47,476 threshold?
Right. Okay.
But quarter, if you were to find out that first quarter of business was great, second quarter business was great, third quarter, wow, we're $50 short on each person, they expect you to make a $50 payment to them to get them up to the threshold, or they could lose exemption status during that quarter, which means you'd have to go back and pay overtime if there was any.
Okay.
Which, great question again, because this requires you to be very good at your record keeping and timekeeping records. Because if you were to find out that your non-discretionary bonus, your business took a dive in one quarter and you didn't have enough, and you said, you know what, I don't have, if I had a bad quarter, how am I going to go and make up this $50, $100 for every employee? I'm not going to do it. You then have to prove that you went back and checked who worked overtime and compensate only those employees who worked overtime in this scenario.
Okay.
So, I mean, they're not saying the moment that you don't pay them, they're saying do an analysis and then you have time to catch up and make that contribution. They kind of mimicked what the IRS does with contributions once you're over 55, and the catch-up contributions, hey, we'll help you get caught up if you didn't do it throughout the year. Same type of mindset here. I think they transitioned in this rule to say, listen, we know employers aren't going to know what those incentives or what those commissions may be. They have to have an opportunity to make up the difference to come in compliance.
Okay.
Does that help?
Yes.
Great.
Thank you.
I have a question.
Sure.
What about straight lesson? So there's a person who doesn't have any salary. They're strictly working for lesson revenue.
So,
Now,
so they're paid piecemeal or per diem?
we wouldn't claim them to be exempt because they wouldn't qualify. All they're doing is, so a tennis pro who doesn't have a salary, whose entire income is made up of lesson revenue that they generate by teaching lessons.
Right. So it's a fee-based service they provide, right? It's a fee for each time they do it.
It's processed through payroll. Taxes taken out. It's not 1099. How would you calculate an overtime?
So the responsibility there is if you are looking to say whether or not they're exempt or not, then the fee that they're getting, and an example they give sometimes is, let's say someone is a painter and provides $20 an hour for each painting, and they spent X amount of hours doing the job and they got paid $500. When you take that calculation of that $20 an hour and multiply it by 40 and then calculate it out, it would be over the $47,000 limit, and so that would meet the criteria. So they don't have to work it. If a tennis pro worked 3 hours a week and they got X amount of dollars, you would just say for that 1 hour, how much did they get at? How much are they getting paid that fee? Calculate if they had worked a full 40 hours, what would that be? Did it meet this $913 per week threshold?
Okay.
If it didn't, then you keep them non-exempt, and then had they worked 50 lessons in a week, which would be great, right? Then you would have potentially overtime obligations to them. If they charged enough that when you calculate out the 40 hours, it would be over this threshold, chances are that they're going to be exempt or allowed to be exempt because you've maintained the salary threshold, assuming that they've met the other criteria.
Right, they're not exempt. I guess that's my question.
Oh yeah, no, they're not exempt. But go ahead.
So if they teach 50 hours of lessons, how would you handle the 10 hours?
The 10 hours should be compensated at time and a half, but you would then calculate what their hourly rate would have been in a normal 40-hour work week, and then you take that and you apply it to the additional 10 hours.
So if they're charging $50 an hour for lessons and they teach 50 hours, I have to pay them $75 for those extra 10 hours of lesson rate.
Correct.
Okay.
Any others?
Nope, not right now.
So now the other piece to that is highly compensated employees. The non-discretionary compensation does not apply. So they already allow, as a highly compensated employee under their specific rules, to incorporate non-discretionary funds. So they don't have a specific threshold where you can have the 10%. It's already incorporated in the definition of highly compensated employees. And then one of the nicest pieces potentially out of the overtime rule that came out was that they did not change the duties test. And so there was a lot of concerns that the government was going to get stricter on the duties test. However, they did not. Their reason for it was that with such a high doubling of the salary threshold, so many people are automatically not eligible to be exempt that they felt there was no need to adjust the duties test because there would be less people for employers to have to even critique or examine or review. So those are what the changes are at this point. So we're going to talk a little bit now about business impact. So what I want to share is what does it really mean for businesses, because the government thinks it's going to be 2 hours of work, you're going to make some changes, you're going to implement some timesheets, and it's done. But the real impact covers your budget. It could cover and impact your products and service model, depending on how your employees are currently delivering services. So if they normally were working 50, 60 hours a week, and you realize that that overtime is not something you're able to budget for or compensate, you may end up having to change or alter how you deliver your services. So for example, if there was a decision that, well, we're not going to charge more for that tennis pro for those extra hours, so, well, maybe we need to schedule them into the next week. Well, that's changing your service model, and that may hinder or hurt how you're delivering services to your customers. Customer service could be impacted, especially if you had people that worked longer hours just to serve maybe the West Coast or to serve folks after hours, and now they're going to be non-exempt, and so you have that risk of, well, do we stagger shifts? Do we set up different schedules for our employees, or do we just not provide service in at those times and hours? Operating hours may be impacted. Work scheduled may be different of how you're scheduling the work to be performed. And then the how, when, and by whom really may be impacted, especially when you start thinking about millennials, mobile devices, and other things we're going to talk about in a minute that really impact how work is getting done today, the reality of how work's getting done. People aren't sitting in the factory room from 8 a.m. to 5 p.m. and then they're punch in, punch out, and done in most cases. And so work is getting done a variety of different ways with technology today, and you really need to be considering how that's going to be impacted. Recruitment processes, retention, benefits, incentives, all that may change because people are going to be more aware of, well, am I exempt or am I not exempt? Are you paying me for every hour work? So it's going to put some pressure on employers to have those discussions a little differently. Retaining employees, as you go through the communication of this process, there's a lot of belief that someone who's a white-collar exempt employee believes that their role is very professional, that over the years we've considered those folks are professionals. And when you no longer make that person exempt, they start feeling like they're not a professional anymore. So you can have some retention issues early on from your employees until the employees realize the truth that every business is going through this, and so it's not just their employer that's striking or taking away that professional status. It's any employer with someone doing those types of job duties and activities. Benefits might be impacted, incentives might be impacted to try to either make up the salary threshold or to recognize, hey, how do we recognize these employees a little differently since we're not going to be able to follow that exempt status. Business culture is something else that you really want to think about and focus on. How you operate and how you communicate this really could impact your culture as to whether or not your employees feel like you're an employer of choice, whether you're an honest, transparent employer, and whether you're supporting them, or whether all along you've been hiding from them something, because any employees that feel like throughout this process, wait a minute, was my employer doing something wrong before, could potentially feel like there's a disengagement there and mistrust with leadership. So as you go through talking about the business impact, you really want to think about the culture as you make any changes and as you're implementing them. And then finally, the biggest business impact is your sustainability. If you're not able to achieve compliance, you run the risk that we're going to talk about of really damaging or impacting your company because of the cost of defending litigation. So I'll pause there a second. Any questions, Bill or Joe? Or?
No.
Good. Okay. So from a compliance perspective, here are some of the risks that you're going to face. If you're paying an employee a salary, it doesn't necessarily and does not automatically make them exempt from overtime obligation. That's a big misnomer out there that you really want to consider and think about. Misclassification is a huge problem in many organizations, even if you weren't talking about overtime rules and changes to the overtime rules. A title does not dictate for the Department of Labor what the actual job duties are and whether someone is exempt or not exempt. If you think about a lot of small businesses, everybody in the business is a vice president, a director, or the owner, or CEO. So those folks, though, they're running and managing the business, and they're going to qualify, but they might have people under them that are really more tactical, that are more the line workers and employees, that are doing exempt type of work, but they give them a bigger title because that's how they get presence when they're networking, when they're out there selling services, or when they're working in industry. And so you really have to step back and look at the actual job duties that are being performed on a consistent and regular basis. That's what matters to the Department of Labor. And so misclassification is a huge compliance risk if you aren't evaluating your job descriptions, doing job analysis to support wherever you land. So if you land on non-exempt, make sure that your documentation supports that. And if you land on exempt, make sure again that your documentation can support that, as well as the actual duties and actions of the employee, because they'll ask them. This next topic here is really critical, and if you have questions about this, this is usually where I get some questions about it. The Department of Labor, with this whole FLSA rules and regulations, have language that are the terminology is suffer or permit to work. It's really critical for an employer to understand what that means and why it's important. Because if an employee is working and you knew about it, and as far as the Department of Labor is concerned, you knew about it if they were on your email system, if they were on your computer system, if they were using your phones, if they were sending faxes, if they were doing work that you later found out or were aware of, you have suffered or you've permitted them to do that work, and therefore they must be compensated. And so on one end of the spectrum, suffer or permit has to do with just paying them. Whereas a salaried person might work 50 hours a week or 20 hours or 5, you don't care. That non-exempt person, you need to be knowing every hour they actually work because they must be paid for it. And so when you think about these next few bullets here, which I'll scroll up a little bit, telecommuting, when they have remote access, when they're on their iPhone, their Android, when they're working through a VPN, email systems, whatever it is, if they are accessing your systems or working, it counts towards their non-exempt time for that 40-hour work week, or in California, the 8 hours. And so ignorance is not an excuse, and it's not a way to get out of your obligations to, one, pay the employee, and two, calculate those hours towards overtime. So some normal situations that happen is you have an employee who works through lunch. You have someone who's at an off-site meeting, or you have someone that goes to events in the evenings for the business at your direction, but since they were salaried, you didn't have to worry about how long they did it, where they went, were they reimbursed for anything. These are things that really come up when you have a non-exempt employee. And then this bottom bullet here is really interesting because it goes to the core of a lot of employee loyalty. Employees become very loyal, they have a lot of pride in their work, and they want to help their employer out. So they may come into work early, they may stay a little late, they may work through lunch. For anybody transitioning and reclassifying exempt employees to non-exempt, these are serious and significant problems you have to watch out for. They become compliance risks for you even though it was good-willed or there was good intent behind it. And so, for example, if you give a person that 30-minute or 1-hour lunch break and they're off the clock technically, so they're not exempt and you're not paying them, and then while they're sitting at their desk eating their lunch, you walk by and hand them some files or paper to work on, and they jump on the computer and start working, you've just negated that lunch break, and you've got to pay them for it. And if you are an organization doing a 40-hour work week and you have them work 8.5 hours a day because they have that 30-minute break, well, think about it. If every day you interrupted or they themselves worked, now you have 2.5 hours a week of overtime that's happening that you don't want to happen. And it impacts your salary and your budget. So these are really critical risk factors that organizations, as they now move into maybe managing a more non-exempt workforce, need to be thinking about. Okay. So compliance risks regarding lawsuits. You're less likely to get audited by the Department of Labor, although it can happen and will happen now with them increasing their enforcement. But the reality is your lawsuits or your risks are going to come from your employees, either doing what we just talked about on the last slide, where they're going to be working and doing things that you either knew about in the past or you don't want happen anymore, but they're still doing it because it's really hard to enforce or track, or they're going to be disgruntled and they're going to file suit against you because they think something's wrong. So these lawsuits for overtime really usually come from the employees versus coming from an audit. But a claim for overtime will not stop there, because if you want to consider, if you consider the employee exempt, most of the time you did not track their hours, which is a requirement. You probably weren't paying them the time and a half premium for the hours worked, and there's a possibility on this third bullet down here that you violated federal or state minimum wage. And I'll explain that for a second. When you have an exempt, someone that you've classified wrong as exempt, and they were working 50 hours a week, if you weren't tracking their time and they file a claim saying, I've been working 50 hours a week for the last year, they're going to go back and ask you, the employer, prove they didn't. Prove that you have records that shows they didn't work. So that's hard to overcome if you weren't tracking any hours and having any timesheets or record keeping or time clock systems to prove it. So now not only have you potentially failed to pay overtime, you've also failed the record keeping requirements. And then if they were a lower paid employee, so if you were just paying them minimum wage or maybe a little over minimum wage, when you then calculate what you paid them for the full 50 hours, you divide it by 50, you run the risk of that hourly rate falling below state or federal minimum wage, and now you'd have another penalty. And all these penalties come with equal damages. So you could really be in a tough spot from a violation perspective if this happens where you've misclassified somebody. And then the government won't stop there, unfortunately. They will then say, well, if you did it for Mary Jo, then what about John and Jane and Tim and Tina, all your other employees they're going to look at. So you really open the door to having every employee scrutinized when they've worked and whether or not they should have been classified as non-exempt or exempt. Any thoughts or questions on that?
No, not right now.
Okay, good. But you can come back to it.
Yeah.
So we want to talk about the strategies now, the good pieces here of how do you go about ensuring compliance and ongoing success for your organization. You want to develop a strategy to achieve compliance and make sure you're communicating with the workforce throughout the process so that there's some transparency there and that you're engaging the workforce, because the more you build trust and engagement, the more they'll understand that if you are making changes now because of the regulation changes, that you're doing it for their benefit as well, not just yours. And so this, it's one thing to get caught doing something wrong and then having to make changes and you hide it from the workforce or you don't want anyone to know. But the cat's out of the bag. People know these regulation changes are there. They're going to be effective on 12/1, so they shouldn't be extremely surprised of you making some type of changes. It's just how do you communicate those changes and what do you share so that the employee is comfortable and trusting that what you've done is right for them. So make sure you have a strategy for how you're going to communicate that. Don't wait until after you do it to try communicating. And I've had some recent stories where employees have contacted us saying, I think our employer is doing something illegal here because suddenly I'm now paid differently. Well, the employer did everything correctly, but they just failed to communicate with the employee. So be sure that's something you do. You want to determine whether or not you're even impacted by the regulatory changes rule. So if you don't have any exempt employees now and don't plan on doing anything with the salaries or trying to make them exempt, you may have no action whatsoever. You just want to maybe shore up how you've documented your non-exempt employees. Make sure your record keeping is there and everything's right. But there may not be anything you have to do beyond that. But for every position in your organization that you do designate as exempt, you should be conducting a thorough job analysis as a really good, sound, compliant foundation to reviewing the positions against those three-pronged exemption tests that we talked about earlier. The salary basis, the salary test of the salary amount, so the salary threshold, the salary basis, and then the duties test. Determine if any of your exempt employees are only classified as exempt because they were a highly compensated employee. So if that was the case, you need to review only those regulations and those rules that address those highly compensated employees that are now over $134,000. Now, if you think about it, that was a drastic change to make a $34,000 jump, but they don't plan on raising that limit every 3 years. It's the salary threshold for the other categories. And then once positions impacted are identified, determine the actual amount of the overtime the employees work. So a lot of businesses are really scared of, oh my God, I don't want to pay overtime, I'll just bump up their salary. But if they step back and analyzed how much overtime was actually being performed, they may be surprised compared to what they thought was happening because they weren't tracking records before. And so it's very possible that they only had a few hours of overtime every week versus 50 or 60 hours. And if that's the case, it may not be worth bumping the salary up to chase the rule. It may be worth just redefining how the work gets done so that you minimize that overtime exposure. On the other hand, if you do identify that there's going to be a huge cost for overtime based on the amount of work that needs to be done, you should look at developing financial projections, what that cost is to reclassify them to a non-exempt position if you weren't able to make any other changes to kind of chase the rule and comply with it. So more on the strategies, it's not recommended that you chase the changing salary threshold because if you chase that, not only are you going to throw off the value of what those workers or employees are getting, but you're going to really damage your internal equity. And as you hire new employees, you're going to end up with employee relations issues when you hire a new employee at, let's say, $50,000 because the threshold's now there, and they've got, you know, zero experience, and you've got your person that's been there 7 years that you bumped up just to meet the salary threshold, but now you've got an equity issue. So you really want to be cautious about compensation compression and equity, internal equity issues between the employees, because it can create you problems down the line. Find out what the cost of paying the employee is, eliminating that overtime, or even just hiring additional resources to avoid the overtime premium expense. If you find out that you're going to be spending 20 hours a week at a premium rate, now you're at 35, 40 hours, it may work out to just hire another part-time person. And we know that there's payroll costs associated with that, and we know that there's potentially benefit costs and other things associated with that, but you should work with your accounting and you should work with your fiscal unit to understand, is there an advantage or benefit to not paying the overtime and actually hiring other resources?
Yes.
You're going to want to examine any options you have for non-discretionary compensation, and as you mentioned or asked earlier, Bill, that understand what your program is, understand what your obligations are if that's going to change throughout the year where you may be at risk of not meeting the salary threshold.
Mm-hmm.
Recognize that this law is all about promoting fairness in the workplace, and so all your communications with employees and engagement efforts during the implementation phase is critical. Sending the wrong message can damage your reputation and really destroy the work environment. And as we talked about earlier, if you destroy that work environment or your reputation or the trust, it could lead to them filing a suit against you, and they're very hard to defend and very costly. Be certain you not only begin ensuring overtime compensation, but you establish the foundation for your record keeping. So not only do you want to make sure that you identify who should get overtime, but you want to track that. You want to make sure that you've got a record-keeping system and you have at least captured everything that the Department of Labor requires for a non-exempt employee. And one of the things you want to do as well is you want to examine and evaluate your human resources practices and policies, because when you get on the path of classification and putting them non-exempt, if they should not be working overtime, you want to implement policies and procedures either in a handbook or separately of what is authorized overtime and what's not. Because if an employee is suffered or permitted to work overtime and they shouldn't have, you should have some corrective action or disciplinary in place to address that. You're going to have to pay the person because you're aware of it, but then address it so that it's prevented going forward. So if you ended up having to terminate an employee who worked unauthorized overtime week after week, you'd have the documentation and support to show you had a policy, you had a practice, you communicated, you trained the employee on it, and they violated it. And we also paid them when they worked, but they violated our policies and we had to move to termination. So it's critical that you have those policies and practices to back up your business decisions and your personnel activity. Hold those employees accountable for any unauthorized overtime, and recognize that the time window is very short to make these changes and do the due diligence to reach 12/1 effective date for the rules. So that's the content I have for you today. I hope it was informative and deep enough that it gave you a good insight into what businesses can expect and what the changes are going to hold. Here's my contact information. You can reach me in the office or on my cell at any time. My email address is there. You can find us on our website. You can also download our mobile app. That gives everybody access to HR On Demand, which is a way to just click a button on the app and get access to us in minutes so that you can get your questions answered. You can also find us on Facebook and on LinkedIn. So we really appreciate the time you provided today from Turf Republic, and I'm going to turn it back over to you, Bill.
All right, perfect. Joe, do you have any? I had a couple questions. Do you have any questions?
No, I think I'm good.
Okay. Warren, a couple questions that flow into each other here. One, separately, do we know what the yearly increases are going to be yet?
It's going to be based on the 90th percentile of the salary analysis that the Department of Labor is going to do. So they based it on this at 90 percentile, and it will be each 3 years they're going to look at the 90 percentile of earnings and determine whether or not how much that jump's going to be. So they didn't set any specific percentage. It's always going to be based on their 90th percentile calculation.
So and our government works at the utmost level of efficiency. When are they going to do we know when they will notify what that increase will be? Because right now they're giving you 6 months to implement this. We have any idea, or we just wait and see?
So they anticipate having by the fourth quarter of the third year information to communicate out so that by January 1 you already know when it's effective. But that's not a lot of time.
No, okay. And then two questions that sort of lead into each other here. Tracking. So there's 16,000 golf courses across the U.S. The average maintenance budget just on the golf course is about $600,000. They are not using, probably not using software. They're using maybe Excel, probably a notepad to track equipment maintenance, chemical records. What does tracking have to consist of if they're audited? A notebook? Does it have to be something official?
So no, the method of tracking is not dictated by the Department of Labor. But the Department of Labor is very clear on what you have to track.
Okay.
And so there's a list of all the requirements that they look for as far as record keeping. So, for example, it'll be name, social security number, the work week, what was the pay period, how many hours did they work, the location of the work. So they have like 12 or 15 items that have to be tracked. Most of that you already are tracking in your payroll records. The only thing you probably are not tracking in that laundry list of items is the hours worked. So you kind of take everything you already basically capture and have for payroll, and then what you're adding to it is the time tracking, the hours worked piece.
Okay.
So if you think about it, Bill, how you process payroll when they're salaried, maybe every week you're just paying them the 40, paying them 40, paying them 40. When they're non-exempt, they want you to be able to prove, well, why did you pay them those 40 hours? Or why didn't you pay 42? Oh, well, here's their timesheet. Here's the time record. Here's my download from our Kronos time track. Whatever it is, you're proving those hours worked.
Yeah. So then my next question is, so if the employee basically files a claim with Department of Labor or against the club, feeling they work over those 40 hours, they do not work over those 40 hours. But however, the club until now has not, or the employer has not tracked their hours. If they start tracking hours forward, is there a precedent set then, or is it basically the employer's out of luck and basically falls back to the staff when it comes to a lawsuit or something?
So great question. I think there's multiple pieces to the question. I'll break it down. So first and foremost, if an employer had already been, if they were already non-exempt and that was correct, but they hadn't been tracking it well or documenting well, you want to make those changes and adjustments going forward and implement it, because even though you might have done it wrong in the past, that's not a good precedent to set to keep doing it that way. So right off the bat, implement it, put it in place, start tracking it some way, shape, or form. If an employee is going to file a lawsuit just on that scenario, forget all the other changes of, oh my God, you know what, they're not tracking my hours right, or now I've got to track hours and they have them wrong, you start to build your case because you're going to have week after week after week of hours going forward. And when they claim we were working 60 hours a week and the timesheets show they're working 40, 42, 43, the employer's going to have a lot more ground to stand on to say, wait a minute, they might have worked an hour here or there, maybe we missed it, we'll look into it, but they weren't working 50, 60 hours a week. So at least it starts giving you a better baseline as an employer. Mm-hmm. That you want to build that baseline better as the employer going forward to make sure that you've got that covered. Now, the other piece of it, though, is if they're going to be reclassified, they're exempt now and they're going to non-exempt, the employer's safe because the regulation changes is theoretically what's caused you to make this shift. They were exempt, now I have to track their hours, so starting this date going forward, you're going to now have timesheets, here's the timesheets, here's the training, here's how they have to be filled out. By the way, here's the policy on what you can't do. Can't work unauthorized overtime, can't do this, and you make sure not only the policy, but that whatever timesheet you use, whether it's an automated, whether it's electronic, or paper, it should say right on that timesheet, I certify these were the only hours I worked, so that you've got in your personnel records, when they file that suit, they certified every week they weren't working more than this, and we had no knowledge that they were.
Very good. That appreciate it. Those are some good answers. I'm sure they'll come up. Joe, I don't know if you have any follow-ups after those?
No, I think I'm good. Thank you.
Okay. Warren, appreciate you joining us today. Appreciate your time. I know you and I talked about following up on a couple HR items moving forward with our career connections area on Turf Republic. So we appreciate you joining us. Everyone, appreciate your time. This will be on demand on Turf Republic on the same link that we had before. It's bit.ly/TurfChat42. If you have any questions, we'll post Warren's contact information as well. If you want to get a hold of him, we'll also we will have Warren's app on the iTurf apps app market as well. If you want to download that. So in closing, again, we want to thank our partners, Pioneer Athletics. You can check them out on Twitter at Pioneer Athletic. The no S. You can check out their Facebook pages, Bright Stripe or Pioneer Athletics. So we thank them for their support and their partnership. So guys, I appreciate your time. You have a great day, Joe, and have a great member guest this weekend.
Thank you.
Thank you.
Take care, guys.
Bye now.